So the way that I learned it was I'm very timeline. I like to see a timeline and then I kind of figure where things fill in that way. Now, every deal can be a little different. Title can overlap in different ways for different reasons.
Try to land the plane on time. And that's very difficult to do because it's very easy for one of these people to kick something a day over and have it go into the next week or whatever it is, and then you lose momentum. The lender's not ready, all those things. And what legal does is a lot of stuff that I still don't even understand. There's a whole series of items that legal has to run in parallel to anyone that's closing a deal. And so getting into this business, how did you kind of learn that process? Because that's really important too, to go from A to Z in any deal, any transaction. How did you kind of learn how to do that and streamline it?
So the way that I learned it was I'm very timeline. I like to see a timeline and then I kind of figure where things fill in that way. Now, every deal can be a little different. Title can overlap in different ways for different reasons. But once you see when items come into play, like for example, when you're doing your due diligence period, you're really dealing with the seller and getting the items from them to review, and you're dealing with title and possibly survey. Once you get past the due diligence period, you're dealing a little less with title, maybe the lender's policy, but once it's kind of getting to it and then moving on to the next phase. Then you're dealing with the lender, their checklist, their loan documents. It's not going to be negotiable if it's agency debt, if it's bridge, maybe it is, right? So when you're in that part of it, it kind of dominoes is a really good way to say it. So what is lender going to need? Probably going to want to see the survey and the title commitment that you just got, right? They're probably going to want to see the purchase and sale agreement. So when you go ahead and say, day one, here's everything you need, lender, they can give you that checklist back, and then you can jump right into the documents that you know you're going to need. Our firm is particularly on top of that, where we like to have everything wrapped up on our end a full week to 2 weeks before the closing date, where maybe we're just waiting on clients to execute the document, but the document is otherwise vetted and approved by the lender. Because, like you say, something can always come up last minute. Two things come to mind on a recent transaction that a client did, if I can speak on that.
Oh, yeah.
There was I'm still confused as to how this happened, but the way that the survey and the title policy was written, there were clearly two access points of roads, right? And I won't name the property and I won't name the client or anything like that, but somehow on each survey, neither road were listed as a public road, which meant that it was a private road, which means that who owns this private road? One of them was, I think, a branch of the federal government for some reason, I don't know. And the other one, it was like, well, people have been using this road for 30 years. We know that the city is the one doing the paving. This is clearly a public road. And then title and lenders counsel is like, well, we don't have anything documenting that. And I was like, how do I go about documenting the existence of a public road, right? So naturally, we call the city, get that ironed out. But that was a whole hiccup 2 weeks prior to closing. And then in the same deal, a week prior to closing, that particular deal had pref equity involved. And the pref equity didn't necessarily retrade, but, made the closing a little bit more difficult than it needed to be,
Yeah.
Pref equity is not your friend. They're an equity partner and that's it, and sometimes in other deals, I've seen pref equity retrade. And it's like, well, no, we actually want to change the pref terms, or we're going to cut down your acquisition fee, or we want you to put an extra $300,000 into an account for maintenance, even though it was a new build. Why is there maintenance items for a new development project? I mean, pref can really be a beast sometimes. So we like to get all of our documents done well in advance so we can kind of navigate these situations, because, you can't control the pref equity group. You can't control whether a road is deemed public or private, right? There are so many things that get involved towards that closing period that you really just want to make sure you can have everything, all your ducks in a row, and you're not trying to pile that on at the end too.
Yeah, you learn a lot every transaction you do. There's a new problem.
Mm-hmm.
It doesn't matter, how many times you transacted. There's some new little piece that picks up. Like on the last one, they found there were two tax parcels, and they're like, well, we didn't even run searches on the second one. And it was like a sliver of land that was like an acre, but it was like sliver along the side of our property. We found out that we didn't even actually pick up that parcel when we purchased the property, and we were supposed to.
Perfect.
So it worked in our favor that time, but then we got to go back and try to grab that land. We missed an acre off the site that we should have owned. But that was a whole confusing thing that happened in the middle of the transaction. You're trying to beeline it to closing and get everything done and wrapped up. And so as long as you can if you're rate locking, you get to like 2 days before closing, you can get to your rate lock, get everything buttoned up enough to get to that part where you're putting the deposit down, then you can typically close a couple days after that.
I agree with that.
But if you can't get 2 days within 2 days of closing to rate lock, then you're kind of in a tough spot. Once you get to rate lock, it's really the lender's deal to get you closed. Less about you. And so, yeah, it's a lot of craziness that you have to deal with. I'm going to pivot a little bit. So there's also a lot of transactions that are happening right now that are, we're seeing all kinds of stuff, all kinds of bad things happening, foreclosures, just a lot of like lender issues, things like that. What are you seeing on that front in general? Like where things are in the market now, what kind of distress are you seeing being from sitting in your position?
Well, a lot of times, there are operators who, and I want to preface this too, just because a deal is possibly distressed doesn't mean that the operator in and of itself did anything wrong or did anything bad. I'm sure there are operators out there in the Texas or Florida markets that achieved the rent growth that they thought they would receive, fixed all the CapEx items they were expecting. And then within the last 2 years, property taxes and insurance rates, tripled in some areas.
Mm-hmm.
How do you underwrite that? There are so many people that are becoming the victim of these. One, the interest rate hikes. Two, the insurance rate hikes. And then property taxes, depending on the state that you're in, where you're seeing a lot of distressed assets for that reason. Now, are you asking me on the acquisition side or the disposition side of that? I mean...
Well, I guess both. What are you seeing as far as distress in general from people in general?
I think that a lot of people that are distressed are doing everything they can to get to the next rate cut, whenever that may be, right? One of the things that you're really starting to see, though, is that time has kind of worn out. Your extensions have probably been all exercised at this point, and the lender that you have is saying, we're going to foreclose, we don't want to keep extending, yada, yada. So I think what you're going to start seeing is a lot of, I hope not, but I think you're going to start seeing lawsuits from deals that went south where investors are possibly, suing the syndicators. And I think that a lot of people, rightfully so, worry about the content that they create in terms of, am I compliant with the SEC, for example, like in a 506B race, something like that, where they're not allowed to advertise, but what can I say? What can I say? I think that a lot of what you're going to see, checking previous social media posts to see if certain returns were guaranteed in a certain way or whatnot. So I think there's going to be a lot of circumstances where you see people suing syndicators if they had to do additional calls and whatnot, unfortunately.
Yeah, I mean, it's something that is definitely going to exist because you've got people that came into deals as an LP, they're your hands off. You're not really paying attention too much. You don't really understand what's really going on in the commercial space. All you know is that everything else around you seems to be okay. Your home price hasn't gone down. That you own. You still have a job. There's not like a ton of distress elsewhere, but in commercial real estate, a lot of distress right now. and it's a lot of it's really challenging. And so what's going to happen are these LP investors are going to look at that and they're just going to be mad because they're going to lose their investment. And it doesn't matter how many disclosures you signed in the PPM or any of that stuff. People can sue anyone they want at any time. And so I think you're right. I think there's going to be just angry investors that are just, hey, let's just try to get something back. And it's unfortunate because a lot of operators out there are just at the mercy of the market. When interest rates go up 5% in 18 months, creates a whole new landscape. Mm-hmm. And in that environment, you have to be able to really over communicate to your investors